Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Arweave and its token AR, conduct machine learning based price forecast, regression analysis and accumulation strategies, as well as estimated bull run target for Arweave. None of the content is financial advice. Let's get started. Over the last 24 hours or so, Arweave has been one of the rallying cryptos, about 14% rally. The price is at around $16, market cap slightly above 1 billion, and in terms of the circulating supply and max supply, almost 99.5% of the max supply is already in circulation. So per tokenomics, that bodes really well. Again, not financial advice, but if you toggle between the price chart and the market cap chart, they are essentially one and the same. That means whatever growth happens in market cap gets reflected back in price. That is a good testament of its good and sound tokenomics. It's currently ranked number 87 by market cap, and if you now we'll go to our website cryptoweeklies.com, the link on the bottom of your screen. All the content available for free. You don't have to pay or sign up for anything. So this is the machine learning based price forecast. This machine learning algorithm was trained on the weekly price of Arweave and its token AR, and using techniques such as seasonal ARIMA, LSTM, and XGBoost. The machine learning model has provided three scenarios: the bull case, the bear case, and the base case. Uh, Base case is all things equal. What is the directionality of the price action? Again, slight directionality bias to the upside. That means if all things are equal, the likelihood of price going up with time is higher than going down with time. The bull case in the next 6 months for our view per the model is between, again this is non-euphoria bull case at 68 percentile confidence level, between 16.7 dollars to about $42 or $43. If we take into the consideration the euphoria phase where the market sees a euphoria pan out sometime in the post having year, like it did back in 2021, and as well as early 2021, late and early 2021. If that kind of two standard deviation euphoria case is out there for Arweave, again no model can predict what the market has to do tomorrow, but these models do help understand what are some of the expected scenarios in those bull cases and the bear cases which the market determines. So in the two standard deviation euphoria case for Arweave, the price could be somewhere between $19 and about, roughly speaking, close to $102 as a peak estimated over the next 6 months, if that two standard deviation bull case were to pan out. If on the other hand, if the market were to crash, the price could be somewhere between $4.7 to about $12. And again, you can see that these values shift week by week. So for example, on March 2nd of 2025, again close to 1 month away from today, price could be between $8.32 to the upside, sorry, to the downside, and about $32.50 to the upside. So that is the ceiling for that particular week. If you're interested in tabular valuation, these tabular details are available by week forecast for Arweave. The base case, which is the directionality case, is this column in the middle that is denoted by the pink line over here. To its left are the three bear cases at 1, 2 and 3 standard deviation on confidence level, and to its right are the three bull cases at 1 and 2 and 3 standard deviation confidence. So the way to interpret this is the week which will end on February 2. For that week, there is a 68% chance that the price stays within $12.33 and $16.68. And again, you can see that the current price is at around $16.03. The 95% chance that the price stays between, roughly speaking, $10.60 and $19.22. So the 95% chance coincides to the two standard deviation bull case and the two standard deviation bear case. The phase of the market that we are in right now in the post halving year for Bitcoin, the bull cases do have a higher weightage than the bear cases. We see them typically in the year after the post halving year, typically in 2022, now potentially in 2026. So now that we have covered the machine learning side of things, the polynomial regression based fair value estimation for Arweave, this pink line denotes the polynomial regression fair value for Arweave based on the weekly price action since the token launch. And the attempt for this regression analysis is providing a non-linear model based fair value, wherever in the bull market the fair value exceeds with time or increases with time. In the bear market, the fair value goes down with time, so as to enable estimating a buy zone below this pink line ideally, and a sell zone above this pink line, based on some residuals, again one standard deviation residual to the upside to help wherever the cutoff point for the euphoria phase starts. Similarly, a decent buy zone in the bear market below the one standard deviation residual applied to the fair value below this green line to identify the great buy zones. Again, we are currently in one of those below $16.20. Again, if the post having here euphoria takes into the place the two standard deviation residual applied to Arweave, again you can see the major tops occur around that kind of two standard deviation residual. That valuation is currently at around $92, and if let's say it takes 3 to 4 months, that valuation could correspond to that $103 target that the machine learning based model had compiled for its two standard deviation bull case. Again, your confluence between this $100 price and the regression based valuation, that's a great thing to see. In terms of the three accumulation related model, I'll briefly cover the SMA model, which is 20-week simple moving average based model. Helps the price color code into risk level between 0 and 1. 1 is where risk levels are too high, like they were back in March of 2024, where the risk was at around 97%. Today the risk is at around 24%. And again, if you were to look at again, this model does not identify the actual bottoms. Again, it does a better job in identifying the tops. The second model, the DCA model, does a better job in identifying the bottoms. Again, that's why we have multiple models, and we will have a composite case as a summary of all the models. Again, this model with a moderate price target between $50, again that is at 60% risk, to about $60. That's the moderate end of the target, and the higher end between $63 and $71 based on this SMA model. Again, we have multiple models for this one. The DCA model, which is based on the polynomial regression valuation, that the pink line that we saw at a weekly level, this is applied at a daily level, and based on the proportional and the time adjusted distance between this regression line, the risk levels are assigned between 0 and 1. Again, right now the risks are at around 9%. That means this is one of the best time to DCA. Again, if you have this hypothesis that only to DCA in whenever the risks are less than 20%, let's say, this model does a decent job at identifying those levels. And again, if you can go as low as you want, only less than 10% risk, again we are at one of those phases. And again, based on this model, the sum of the moderate targets for Arweave could be between $47, and that is at 50% risk, to about $70 at 80% risk, and above $70 between $70 and $86. That's the higher end of the target established by this model. If we look at the time weighted average price, helps identify a great accumulation zone in the bear market where the price is below this time weighted average price based line. This is the blue line, which helps identify what the amount of time the price has established above this level, and if the prices or the market were to come back around, there is a decent chance that the price trade eventually above this blue line. In the bear market starting April 2022, when the price was sub $22, still about recovery when it began in February 2024. This was a great accumulation zone identified by this model. Again, this model is now signaling another accumulation zone below $17. Price has been close to that range since about October 2024, with a brief deviation to the upside in December 2024. So that's another model where the risks identified for Arweave are relatively less. If we were to go and have a composite model of all these models that we discussed, the regression model, which is the DCA model, the TWAP, and the SMA model, the three accumulation model, the weighted risk for Arweave is at around 10%. And roughly speaking, if this is just a risk reward based analysis, you can see that the regression risk and the time weighted average price risk for Arweave were very low. SMA risk at around 24%. Estimated bull run peak is at around $160. So roughly speaking, about a 10x from the current price of about $16. And with that, we can conclude the video by saying that the first zone of confluence is at around between $90 and $100. Although there are some targets for especially the SMA model and the DCA model where the targets are between $60 and $70, and the higher end of the estimation per the estimated bull run peak scenario is at around $160. And with that, I would like to conclude the video. Hope you enjoyed the content. If you do, please give us a like and subscribe, and do visit cryptoweeklies.com for all the updated charts. They get updated every single day, and you can leverage them in your own analysis. With that, I wish you a great day ahead and hope to see you again tomorrow. Thank you and have a nice day.